Then from there, once the property's greenhabbed, then we tenant it. Now, generally, we prefer to use Section 8 tenants. Is everyone in here aware of what Section 8 is? It's basically a government program, and Section 8 is flourishing around our country right now. And we're seeing a completely different type of Section 8 tenant than we've ever seen, because what's happened in our economy, I mean, I personally know people that were making $400,000 or $500,000 a year with a 750 credit score that are nowhere near that right now. And so what's happening is a different type of person is dependent on the government nowadays and using their systems. Well, with Section 8, it's pretty simple. They basically pay their rent. And in the areas that we work in, they pay 100% of their rent. So what that means is, as an investor, we're looking for returns, right? We're looking for the monthly rent coming in every month. What that means is every single month on the same day, the government puts that money in the owner's account. The money never touches the tenant's hands. They never see it. So they never have an opportunity to not pay, be late, or have to get on a payment program. And so we really, really like that. And then from there, we have property management companies. You know, again, that was another thing that took us a while to get. We had to make sure that we had good property managers in place that can manage your property, manage the tenants, and so on. So these are the 5 steps of success that we operate from. Here's a real quick example property, one of our properties. This was a property on Hazelton Street. This is a ranch property, 3-bedroom, 1 bath on a basement. And this specific property sold for $35,000. That's what the investor purchased it from. The rehab cost before rebates and credits was $10,800. So the total funds needed, $45,800. Now the after repair value on this property, and for those of you that don't know what that means, after repair value basically means that an appraiser comes in and says, hey, this house is unlivable. These are all the things that need to be done. But if you do all these things and complete it in a good workmanship-like manner, then the day it's complete, based on other comps in the neighborhood, this is what your house is worth. And you can't see it, but you can kind of see it right here. It says energy efficiency update, 10% increase. So again, Jim was talking about earlier about how a green house will appraise for a minimum of 10% higher than any other house on the block. So as an investor, again, you have no competition. You know, right now this is a buyer's market. It's all about purchasing property low, cash flowing, holding on to it, and as the market turns and turns back into a retail market and turns into a seller's market, that's when you sell, and that's when you cash out. This specific property had over $40,000 equity. So the day that this investor closed, they made $40,000 on their investment. And this property, because it was a smaller property, we told the investor that it was only going to rent out at $800 per month. Now, as a company, we prefer to underpromise and underpromise as opposed to, and then overdeliver. Underpromise and overdeliver, right? Now, here's the thing. We learned that the hard way. We've learned that, hey, we're going to go bare minimums. Well, this specific property ended up tenanting at $900 a month. So you can imagine how excited the investor was when we came back to him and told him, hey, you're getting an extra $100 a month on your rent, which is an amazing thing. Here's just a couple pictures. You can see this is the kitchen in that specific property, Hazelton. This is some of the work that was done. In the Midwest, basements are pretty big. Finished basements are pretty big. So we use that as the focal point. Here's another before and after of a kitchen that we did. Another before and after. So that's basically it. That's basically what we do. Okay? And so, for those of you that are interested in creating passive income, for those of you that are interested in having your assets outweigh your liabilities, we'd love to speak with you more about it and sit down with you and show you exactly what it is that we do and see if we can assist you. It's quite possible that we can, but then again, it's quite possible that we can't. We know that our program doesn't work for everyone. We know that real estate investing isn't for everyone. And I'll be the first to tell you, that real estate investing isn't lollipops and babies and puppy dogs all the time. There are challenges in it, but when you have the right system, when you have the right people in place, you can do some amazing things with it. So like I said, this is a buyer's market, right? So in a buyer's market, you buy as much as you can, and as the market turns, as an investor, you want to hope that you're done doing all your buying. Because at that point, that's when you sit back and sell your properties off one at a time. And in this specific environment of the economy, you're going to find out that most of our clients, they're not even quote-unquote investors. In fact, most of the quote-unquote investors, they're out of the game because they lost their shorts, because they were purchasing on appreciation, not cash flow. And as the market turned, their bank account turned down, right, for the wrong way. So how do you fund a property? Well, for a lot of our clients, about 80% of our clients, we've had a 401k that turned into a 201k or an IRA, and they were looking to create tax-free returns back into that retirement plan. So for those of you that don't know that, if you purchase a property with your 401k or your IRA or your retirement plan, you don't own the property, your retirement plan does. So what that means is that $800 a month or that $900 a month goes back into your 401k or back into your IRA tax-free every single month. And then when you turn around and sell that property, when it's a seller's market, and you turn around and sell it and make a quick $50,000 to $100,000, that's capital gains free. That goes back into your retirement plan. Another way to fund a property is someone else's retirement plan. Again, a lot of people's retirement plans have been losing money. And so if you can go to someone and say, hey, here's what I propose. Here's the property that I want to purchase. I'm looking to borrow this amount of money from you, and I'll pay you a mortgage every month at 8 to 10%, whatever it is. Well, I'll tell you, there's a lot of people out there where if they're getting a 10% tax-free return inside their retirement plan right now, that's good, because they're not getting it. And so then what happens is they lend you the money, your mortgage to them every month ends up being about $250, and you're bringing in $800 to $900 a month. So you're servicing the loan that you just created and putting the cash flow in your pocket. Stocks, bonds, CDs, a lot of people we talk to, they have money in a CD earning 2% if they're lucky, and they'd rather earn 20% with us, plus on that. Or a bank account. We have a lot of people that just have money sitting in a bank earning 1%. And so for a lot of us, we think that if we stack our money away and we save our money, then we're going to be in a great position. But what we don't realize is the rate of inflation on a yearly basis is a lot higher than the interest rate at the bank. So generally, we're not putting ourselves in that great of position. Okay? How many people in here played Monopoly when they were growing up? It's a pretty fun game, right? Now, for a lot of us, that's some of the best financial education that we got. But we don't realize it because we're young, we're kids, it's all fun and games, right? We don't really realize the life lessons that Monopoly is teaching us. But think about it for a second. What are the two best properties on the Monopoly board? Boardwalk and Park Place, right? So if I'm rolling the dice and I land on Boardwalk or Park Place, what's the bank going to ask me if I want to do? They're going to ask me if I want to buy it, right? And if I'm smart enough, I will. Now, after I own that property and I continue to play the game, I'm going to start putting little houses on that property, right? And if I play right, eventually I'm going to trade those houses in for what? For hotels, right? Now, other people are playing the game. They roll the dice. They land on your hotel or your property. What are you going to ask them to pay you? Rent, right? So what I'm getting at is this. Out of all the years that you've played Monopoly, do you know anyone that's ever won the game that didn't purchase real estate? And you probably will never find anyone that will win the game unless they purchase real estate. So all we're saying as a company is this. Whether it's with us, whether it's with another company, whether it's on your own, you have two choices. You can take massive action and actually win the game, or you can sit back, relax, like 99% of our country, and continue to roll the dice.